Alright everyone, this is video 3 of this video tutorial series. It's the second video where we're going to go over a technical concept. As you can see, these are the zones I drew from video 2. For those of you that haven't seen video 2, I highly recommend you see it. I'm not really going to explain how I came up with these zones in this video since it's already done. And I will say that for those of you that don't understand supply-demand concepts, I would recommend that you look up Sam Seiden, that's S-A-M-S-E-I-D-E-N, and look up his free videos. Supply and demand concepts are the foundation of my entire trading methodology, and I learned, I would say, 60% of everything I know about them from just his free stuff online. So I highly recommend it. I've never been to, he teaches at a rather expensive, probably very good trading school. I've never been to it. I know, so I couldn't tell you anything about it. But I will say that his free stuff is great, and I would highly recommend anyone watching that if they want to catch up to speed in terms of really understanding well how to determine supply and demand. But with that being said, this is video 2, so now I'm going to show you basically how I break this down. So video 1, this is what I call my daily supply and demand zone. So up here we have daily supply, down here we have daily demand. Demand here is in red, supply, it's the zone between the two red lines. Supply is the zone between the two blue lines. Now what I particularly like about the blue more than the red at this moment is that our supply zone up here between the blue lines, it's what I call a virgin supply zone, in that price broke down and it's not retraced back up to it. Whereas here, our demand zone, we can see once it was formed, price came back in and pushed up. So of the two, I like the supply side a little bit better. Now this actually isn't going to focus on that. Now I'm going to show you how to draw. So this gives you absolute supply and demand levels, if you will, daily supply demand levels. Now I'm going to show you how to draw relative supply demand levels. Now this is actually a concept that essentially I'm borrowing from a trader, goes by the screen name ICT. His name is Michael. He does a lot of work on baby pips. Excellent resource for new traders. I recommend his stuff. It does work. He's solid. I had a very similar concept I would do for myself, in which I divided the area into quadrants, and I saw him do something with a Fibonacci one time, and it made it very easy to draw that rather than my old quadrant system. His triad, as he calls it, the Trinity system, is I find it's actually probably more effective than what I was doing. And I do it a little bit differently, so I call it a different name. I call it determining, I try to determine my weekly relative supply-demand curve. In other words, are we closer to supply or demand relative to the previous week? And so I have a different name because I do it just a little bit different, but it's basically borrowed from him. So Michael, thank you for that. I go ahead and get a Fibonacci retracement, and I look at the week that we just had, and I look for the high and the low of the week. And here was the high, and the low is right down here. Okay, so I take the high and I take the low. Okay, and basically I'm going to go ahead and delete this demand zone for here just to keep it simple. So basically what I do then is I say, okay, this is where I know we are overbought and oversold, and not where an indicator is showing us where we're overbought or oversold. Not that because an indicator isn't relevant. I'll tell you, when you're overbought, price starts to turn down. That's how you know you're actually overbought, not because an indicator said so, but because price said so. If you're oversold, price starts to turn up. Not because an indicator said so, but because price actually said so. So this gives me kind of a relative, perspective of where value is and where the market is going to be likely to be overpriced or oversold again this coming week. So I can tell you, I take the middle three. Like I said, Michael from ICT draws this a little differently. I do it like this. I take the 61 to the 38% retracement, and I draw a basically a rectangle, and I kind of black that area out. And I don't look for trade setups in there. Period. I don't. I'm looking for trade setups at the 61.8 level all the way up to the 100, or from the 38.2 level all the way down to the double zero. In here, if there is a supplier demand zone that I see, I don't take it. What this does is it's all, trading successfully is all about stacking probabilities, and I'm able to basically stack the probabilities in my favor if I know where the market was oversold or overbought before. I know there was basically more supply there than demand. So let's say, for example, if a market was overbought and it dropped off, the only reason it dropped is because there were more willing sellers than willing buyers, at that range of prices. And so I know that those sellers, still have orders. If every seller had filled their entire order, price would have moved up, because that's the way a market works. But it didn't. It dropped from that level. So I know for a fact that there is more selling interest than there's buying interest. At least it was last week, and there's a high probability that that's also going to be a point of reaction this week. So I look, and I basically start looking and drawing. So actually, I don't want to get ahead of myself here. So that's the second aspect of what I do. So the first thing I do is I pull up a daily chart. I draw, my turning points, and then when price breaks out from those turning points, whether it's up or down, I just take those turning points, and then I go ahead and draw a weekly level. So not only do I know where price turned up for a period of several days, I also know now where it's relatively overbought or oversold. So I'll start looking for opportunities in those zones. It's actually pretty simple. With that being said, let me go on to video 4 here, which will discuss how I pick the levels within those zones to effectively trade.